Dear students and viewers, I welcome you with another exam style question on the subject of financial management. This question will test your knowledge and make you learn the concept of dividend yield ratio. Zena School of Accountancy is committed to providing free learning to students from all walks of life. To watch other exam style videos, please explore my channel's playlist. Please also subscribe to my channel to stay informed about new videos. Today's question is based on the following information related to Lilydale Company. Profit before taxation is $750,000. Taxation is $150,000. Profit after taxation is $600,000. Proposed ordinary dividend is $150,000. And retained earnings or profits are $450,000. The market price per share is currently 83 cent cum dividend, that is cumulative of dividend, and Lilydale has 5 million ordinary shares in issue. Based on this information, what is the dividend yield ratio of Lilydale Company to two decimal places? Option A, 3.75%, option B, 3.50%, option C, 4.25%, option D, 4.75%. To correctly answer this question, we need to understand the concept of a dividend yield ratio. The dividend yield is a financial ratio that tells you the percentage of a company's share price that it pays out in dividends each year. Just for your information, the average dividend yield on S&P 500 index companies that pay a dividend historically fluctuates somewhere between 2% and 5%. The next question is how a dividend yield ratio is calculated. Well, the dividend yield ratio is calculated by dividing the dividend per share with market price per share. So, in an equation form, this can be expressed as dividend yield is equal to dividend per share divided by market price per share. However, to apply this formula, firstly we need to calculate the market price per share that excludes the dividend element in the market price. So let's first calculate the market price per share excluding the dividend element in it. From the question, we know that the market price cumulative of dividend is 83 cents. However, we don't know the amount of dividend in this market price. To calculate the dividend in the market price, we must divide an ordinary dividend with the number of ordinary shares. In equation form, dividend per share is equal to ordinary dividend divided by number of ordinary shares. Since the ordinary dividend is $150,000 and there are 5 million ordinary shares, therefore we will divide $150,000 by 5 million shares, and this will give us a value of 3 cents per share. Now we can calculate the market price per share ex dividend or excluding the dividend. Since in the question the market price cumulative of dividend is 83 cents, therefore after deducting the dividend of 3 cents per share from it, we will get market price ex dividend of 80 cents per share. In equation form, market price per share ex dividend is equal to market price per share cumulative dividend minus dividend per share. So once we put the values in this equation, this is 83 cents minus 3 cents is equal to 80 cents. That is a market price per share ex dividend. Now we can calculate the dividend yield ratio by dividing dividend per share of 3 cents with a market price of 80 cents per share. This gives us a dividend yield of 3.75%. So based on our calculation, the correct answer is option A, that is 3.75%. The dividend yield of 3.75% suggests that Lilydale is distributing 3.75% of the share price in the form of dividends. As I told you in the beginning that the average dividend yield on S&P 500 index companies that pay a dividend historically fluctuates somewhere between 2% and 5%. So Lilydale's dividend yield is within these limits. If you have enjoyed this video, please do subscribe to my channel. Click the bell icon for notifications and also share and like this video. Thank you for watching.